it. Why don't you tell us a little bit more about earthfund?
Still wish I'll be a founder one day.
How do you think that will impact the industry?
Real estate industry per se is going through a huge transformation.
I'm
right?
trying to create a company, right? I'm thinking of the long term. I mean, I'm thinking of something that outlives me.
Brigade has been in this real estate space for last 40 odd years, very well reputed, roughly $3 billion in market cap.
So let's talk about the global PropTech ecosystem a little
People
bit.
who are renting out the space are saying that my source of energy should be green because I have to meet my SDG goal.
The single most turn-off in a founder.
The fundamental goal of any business is to start making money at some point of time.
earthfund is the fourth PropTech fund I'm hearing about recently.
You see the total number of recognized startups in India, roughly 6 to 7% are PropTech startups.
Do you see some sort of conflict of interest there, or how does it get balanced out?
The new generation has come in. They are more sort of aware with what millennials are asking, and as a result the adoption of technology in this space is.
Look at the US market, they have an MLS. I mean, you cannot do a transaction without a broker involved.
I was surprised people were using Tinder to find partners for the trek that they would want to go tomorrow.
Saras, welcome to the Property Angel podcast.
Thank you.
You're the first investor we've had on the podcast, so very excited to have you here.
Thank you.
And looking forward to learning more about earthfund, which is, of course, Brigade's PropTech fund that you run. And also talking to you about the PropTech industry in general, understanding the industry, and talking also about the investing landscape, right? So let's get right into it. Why don't you tell us a little bit more about earthfund, what stage you're at, the investment philosophy?
Sure. No, thank you. First of all, thank you for having me here. My pleasure sort of following some of your podcasts, really interesting work that you've been doing on the PropTech side.
Thank you.
So see, the idea of the Earth Fund essentially, what we realize that Brigade, as you said, Brigade is the sponsor and anchor for Earth Fund, and Brigade has been in this real estate space for last 40 odd years, very well reputed, roughly $3 billion in market cap. 7 8 years back, what the group realized was PropTech, not enough was happening in PropTech, unfortunately, because what you traditionally see that there is real estate industry and then there is tech industry. You need somebody to catalyze this ecosystem. So Brigade Reap started 7 8 years back, where they were supporting a lot of early stage founders. And what we in that process realized that there was still that gap to support founders during seed and series A stage, which were building on the in the PropTech space. And with Earth Fund, our intention is to sort of bridge that gap, support founders during seed to series A stage, uh, work on our strength, which is largely the space that we all understand. So Brigade, of course, understands the real estate better. Some of us who've come in from the industry, from the venture industry, we understand the investing world better. So merge the two, sort of help founders who are building in this space. So broadly, that's the sort of the idea that germinated the Earth Fund. Yeah.
So what stage are you at now? Have you raised
Yeah.
some money? Have you invested, made some investments?
So right now we'll be just doing our first close now. We are already in the process of warehousing few deals. We have backers apart from Brigade. We have a lot of other institutions who've sort of backed us. And essentially you will soon hear some announcements from us when we announce our new investments.
This podcast is brought to you by PropertyAngel, the award-winning property management platform trusted by absentee owners since 2014.
So, earthfund is the fourth PropTech fund I'm hearing about recently, right? There was Aurum PropTech, there's Gruhas, there's Spire, and now earthfund. So why the sudden interest in PropTech?
Yeah, I think that's a great question. See, broadly, what my sense is, and honestly, I mean, that's also to do with what attracted me to PropTech, having done, invested in a lot of other spaces. I think, see, real estate industry per se is going through a huge transformation, right? What essentially has happened post-COVID, I think in terms of the consumer behavior and the expectations that the consumer have, that has gone through a sea change, right? On the other hand, what's also happening in the real estate industry is that the companies are also realizing that they need to adopt more and more technology. I think what we saw during pandemic was, everybody was sitting at their home, houses. How do you sell houses for an industry which is traditionally
Yes.
been very, very sort of, pen and paper and, human centric and, in person? Uh, how do you sort of make that adoption around technology? And some of that started to change after pandemic, right? Whether in terms of how houses were being showcased to consumers, or whether, if you would have the ability to digitize some part of the transaction, or whether you have to source the labor and material using technology, right? Or even for that matter, how do you manage these properties which are under construction, right? So all of that started to change post pandemic. And I think that's broadly been one of the reasons that the industry saw that this is a space which is globally worth $217 trillion,
Hmm.
where technology still has to permeate,
Yeah.
right? And we are still sort of scratching the surface. And the other fundamental shift, in my view, if you ask me, is also a fact that which I have traditionally, seen in a lot of these industries go through the transformation, is the second generation coming over in a lot of these traditional businesses, right?
Mhm.
We
Yeah.
saw that in manufacturing, right, where we saw a lot of startups which started to make headway there.
Hmm.
We saw that in a lot of sort of, marketplaces that came up.
Hmm.
Same sort of thing that we're seeing in real estate space, where the new generation has come in. They are more sort of, aware with what millennials are asking, and as a result, the adoption of technology in this space is, of course, going up.
Yeah. Yeah. So John Kuruvella was here for our one of our first podcasts, and in fact,
Mm-hmm.
that was something I was telling him that I moved to India around almost 24 years ago,
Okay.
and at that time I used India Properties to search for a house, and today I use Magic Bricks. So not much has changed, right?
Yeah,
I mean,
yeah.
it's been a significant amount of time, and not much has changed. But I guess, it's time for disruption now.
For sure.
Yeah.
For sure. So no, I think the industry would go through that transformation, right? I think, as you said, I think some things never change. I think that was the lowest hanging fruit in terms of searching a house, right? I mean, in my view, that was PropTech 1.0,
Yes.
where, we started with listing platforms.
Yes.
People, came to the platform, saw that, this is the kind of house I want to buy. This is where I search. We then saw, PropTech 2.0, where we saw the movement from just the listing. I think it was more evolved listing, plus lot of what we saw was co-working spaces, co-living spaces, right? I mean, some of these sort of spaces started to move. And then what we saw was the consumer side of PropTech, right? Which is where we saw a lot of platforms like, LiveSpace or MyGate, and, some of these sort of things started to come by. And then what we're seeing now is a lot of technology solutions getting adopted within the real estate industry per se. And honestly, super excited to see that Indian founders are building product from India for the world in PropTech space, some of the SaaS solutions which have seen global adoption from India. I think that's how we've seen the evolution of this space per se.
So what's going to be the next wave?
So I think, see, broadly, couple of things I see which is going to drive, and that's also one of the thing that we really feel strongly about. Uh, Sustainability, while we talk about it, one data point I'll just throw at you is that 39 to 40% of carbon emissions are happening in the built world,
Yeah.
right?
Yeah.
Now, we all spend 80-85% of our time in, real estate property, whether we are living in our houses or,
Yes.
in our offices. So whether the kind of energy we consume, whether the water we consume, or, any sort of embodied carbon which goes into construction, that has to change. Unless and until we change that, unless and until we solve for it, we would not be able to solve for our, the SDG goals, the zero emission sort of target that we have taken as a country by 2070. So I think sustainability, at least my view is that maybe in the form of embodied material, we could still be away. But a lot of other spaces where sustainability would help in reduction of cost, whether in energy, whether in water, whether in just the measurement of emissions, I think that's also going to be a big theme for us.
Okay. Any other themes?
Of course, and the other bigger themes for us are also going to be one on big thing on the consumer. How do you sort of ease consumer life, right? I think one of the few things that we've seen maybe, around interior marketplaces, etc., where things have sort of seen some traction. The bunch of different areas where we will see consumer would be more and more demanding, and some of the spaces we will see surprise which sprung up there. The other spaces that we see particularly would be also around a lot of, as I said, technology solutions that would get adopted within the real estate industry. So whether it's in the form of a building information system, new age sort of solutions around that, whether, we will see, because see what's happening really is uh, the way we deal with real estate is changing, right? Now we work in a hybrid work environment. The same space can't be utilized the way we used to utilize it pre-pandemic. And a lot of those changes are sort of, showing us a lot of new spaces, new kind of founders who are building to solve for some of the challenges that, this sprung up our way. So B2B, B2C, and sustainability. I think these are the three core themes that we do believe that is going to drive PropTech in
Okay,
this
great.
space.
Can you throw some numbers on the kind of investment that has gone into prop tech companies in
Yeah,
India?
yeah,
Um,
yeah. No, very interesting. See, I think few things first. As I said, broadly what I believe about real estate industry and prop tech, let me start from there, just give you some context. We all would agree that now we are at par with China in terms of our population, around 1.4 billion people. Just to give you some stat, 2022 China had sold close to around 6 million homes.
okay.
We in India have done only zero point 0.4 million. So zero point 0.4 million and 6 million homes, 15x difference for the same set of number of people that we have, right? So there is a huge scope, that we see in real estate and also in prop tech. The second set of data point just want to throw at you, at least in India, if you see prop tech now is almost third or fourth largest category in terms of space. I mean, if you see the total number of recognized startups in India, roughly 6 to 7% are PropTech startups now, right?
Wow.
So that's a sea change that we are already seeing
Okay.
in terms of how PropTech space is changing. Um, and broadly, see, prop tech, again, I mean, a lot of time the challenge we have is we tend to limit prop tech to a specific bucket, thinking of it's a
Yeah.
solution which is only focused on, the
Yeah.
developer. But
Yeah.
there are a lot of, it's a very wide space. It would be financial services around prop techs, whether, the loans which people take to buy their homes, how do you ease their life, the insurance that that people take to sort of safeguard their home.
Hmm.
There would be solutions around that. There is this whole construction tech space. There is this whole sort of, the SaaS space, the marketplace sort of space within prop tech, right?
Hmm.
So if you see that data since 2014, roughly global data, 100 odd billion, had gone into prop tech, right? I
Okay.
think that's a big investment that we've seen. India, we've seen a very similar trajectory in terms of, the contribution compared to the overall space. Roughly 5 odd billion have gone into the prop tech space,
This
right?
is since which year?
This is, I think, since in the last 5 odd years is what we've seen
Okay.
that.
Okay.
So broadly, that number is going up. Of course, I mean, there are aberrations post, at least now, last 1 or 2 years, we've seen the softening of cycle around VC investments as well, because a lot of money has gone in. That money has to
Yes.
come out, return back to
Yeah.
investors, and then investors are going
Yeah.
to, put that money back. But broadly, if you see that 5 odd billion investment in PropTech space has happened in the last 5 odd years, lot of it, by the way, has gone into, we've seen marketplaces like of your infra market and, things like that. We've seen plays like, live space, etc. A lot of consumer driven startups, which have rode this wave. Now we are beginning to see this change where that lot of tech solutions are sort of,
B2B.
finding B2B solutions are finding interest from investors.
What's the challenge you have as an investor? So is it that there is a whole lot of applications you're getting, and or is it that there's a lack of quality startups that you see in the prop tech companies in India?
Yeah. So I think if you ask me broadly, honestly, I'll tell you, I think one of the things where I would want the entrepreneurs to focus on is I've seen a lot of regional plays in prop tech. I think that's also to do somewhat with how real estate industry is
Yes,
organized, right?
yes,
What
yes,
we are seeing is the pan-India developers, there are like a handful of
yes,
pan-India developers. And
yeah,
one of the trends that I see from an investing lens is I would want to back founders who can take this pan-India
yeah,
or have that global aspiration for that matter. So a lot of startups I see when they start with a regional focus. I think nothing wrong with that because I think that also is a big market. But then you need to have that playbook that how do you replicate that from A
yes,
region to B region.
yeah,
I think that's one of the challenges I see in a lot of startups which are like execution focused. They are on, let's say, the property management side or co-living side and some of these kind of spaces. So I think that's one of the challenge I feel that the industry will have to sort of evolve and grow that way. And then the other piece is also, I think, for the founders also, as I said, because the industry is a lot more regional, how do you create this playbook that, you go and partner with different sort of developers at pan-India level,
exactly,
and sort
yeah,
of, grow your business.
yeah.
Yeah.
So someone was telling me that you posed as an college student
Mm.
not too long ago to research a potential investee company. And so, is that something that that VCs typically do? This kind of role playing, or was that more you?
To be honest, I mean, at this stage, if I go and tell somebody that I'm a college student, I don't think anybody is going to believe me. But I think the context here, I mean, what I recollect was, of course, I was doing some simple market research. I'd been hearing about, the Gen Z from our analysts that, Gen Z had been using different applications, been hearing about Tinder, this, that. I was wondering, okay, what the hell is going on? Maybe I'm too old now. So let me figure out. And yes, I do remember I went to to a hostel. So, and I could realize, okay, for few moments I said, okay, wrong decision. I should not have done this. It's a sort of, it's a bad decision. But then, later in the evening when everybody started talking, so you tend to see how millennials are thinking, right?
Yes,
What sort of
yes,
applications they're using.
yeah,
I was surprised that so many solo travelers and what's their worldview now and how different it is from, how at least people in our generation used to think. What are the things that they value more than, what at least, I used to value at their age. I was surprised people were using Tinder to find, partners for the trek that they would want to go tomorrow, or for even sort of maybe go to a sort of a surfing sort of class or somewhere. So, I mean, found a lot of different use cases in the way the young generation is thinking.
interesting.
And we do that sometimes, not always. I mean, maybe, I had that time, I had maybe a day sort of extra, and I said, okay, let me do this experiment. I promised myself that I'll do that often, but to be honest, haven't done that. So that's a good reminder for me to rethink about that.
That was in Bangalore. That was somewhere
No, no,
else.
that was in Rishikesh. That
Rishikesh.
was in
Okay,
Rishikesh. I was in
nice.
Delhi. I had a day extra. I said, okay, let me do this
Yeah,
experiment on
yeah,
myself.
interesting. So, how do you evaluate a startup, right? I mean, how do you arrive at a valuation? Is there some sort of framework you use?
Yeah. So I think, see, the evaluation framework for any startup at early stage broadly builds on few core principles. So I think um, for me at least, I mean, different investors would have a different perspective, but for me at least, the founding team is the key at early stage, right?
Okay.
Because you had been a founder, you know how difficult is it to build a business at an
Yeah.
early stage, a lot of moving parts, right? A lot of pivots along the way. So the team has to have that ability to take it on their chin, pivot, find that right sort of, path for them to eventually grow. So I think team, and then the space. I think the space has to be large. And so if you tell me that, I want to, I'm starting something on a, chain on a tattoo, or something, maybe that would become a big thing sometime. But somewhere, at least I'm not able to get a sense that, it could be a very large sort of market
Hmm.
that way. So I
Hmm.
think
Hmm.
the market, the team, those are the two fundamental things. And I think when the team is good in the right market, they figure out eventually, they are able to create a, a solid, sort of business. I think on the valuation front, again, valuation, I think in early stage, it's very different from, what you get taught at B schools and all. I think it's neither a science. I think it's a mix of science, art, and
Art
voodoo, right?
and negotiation.
And negotiation, of course. So I think a lot of factors play that role, and there are certain thumb rules that you take, that maybe at each stage not more than a 15-20 million percent dilution. Again, lot of variables there, right? Depending on how much you are raising, what space you are at, what are the comparable sort of companies, what were their valuation. So bunch of different parameters. Honestly, no hard science. I can't sort of, tell it like a public market that, okay, I'm being valued at 2x the multiple, or, 5x the
Yeah.
multiple. At least that could happen at later stage, but, early stage, when I talk about C2 series A, I think that's very, very difficult.
Yeah.
Yeah.
So evaluating a team is not easy, right? I mean, how do you get to know a founder? How do you really, because everyone's at
Yeah.
their best,
Yeah. Yeah.
so how do you sort of gauge that?
Yeah. So see, I think it's also like it's very similar to how do you hire right people,
Yeah,
right?
exactly.
So it's very similar to that. I think while we meet founders, I think every investors, they also try and get a sense, independent view of the entrepreneur. From the market or from people, they would have cross
References.
pathways, some
Yeah.
references. It could be anything. I mean, the second time founder is easier because, maybe some
Yeah.
investor would have, worked with them in the past. Otherwise, their ex-bosses, their ex-colleagues. And then I think also try to, I think that's the job we do, right? I mean, try to assess that while talking to their team members or to their co-founders, right? I think that's the most important and softer part of the work that we do at early stage, right?
Hmm.
Because understanding that, the two founders are together, the vision is aligned, is as
Yes.
critical
Yes.
as anything, right? Because one thing which is the most important thing is, the founders camaraderie,
Yes.
and how honestly, I mean, it's tough to say, but one has to sort of make sure that the team stays throughout, right?
Yeah.
And it's also
Yeah.
business that the founder are the ones which are coming with vision. So honestly, bunch of different things we do, try and get a sense from team, from the customers, from their ex-employees or ex-bosses, ex-investors. So bunch of sort of different things come into the
Yeah.
picture there.
Yeah. But still tough. Tough
Very tough,
to tough. It
very
takes
tough.
time to sort of figure out, do
See,
people get along? Will they stay together? Do they have?
no, to be honest, I think even we've seen in like a lot of large startups, even
Yeah.
after the exit, I
Yeah.
mean, things had not
Yeah.
panned out. Personal relationships are very delicate.
Yeah. Yeah.
And I think the way startup journey is, it's very taxing journey. There could be difference of opinion. People do start with a very, very great sort of camaraderie and
Yeah.
alignment of vision, but
Yeah.
then sometimes you do see a challenge where the things do go apart. In fact, I mean, that's one thing on a different note, that having a good co-founder agreement is equally important, right?
Mm.
When things go south,
Mm.
how do you sort of, part ways in a mutually amicable way, so that the company doesn't die?
Yeah.
Right. I think that's also equally important, that, as an investor, I suggest to entrepreneurs as well, right? So yes, I agree that that's the most trickiest part of the job that we do.
Yeah. So let's talk about the industry a little bit. We've seen a whole spate of very heavily funded prop tech companies,
Mm-hmm.
and that haven't gone down very well. Very promising ideas, great teams, but have either been exited or bought over at a fraction of the valuation they had or the money they raised, or have shut down, run into legal complications. Uh, so what is the thinking around that? Why has that happened? Are there certain patterns that we have seen? What's the learning from all of this?
I think so. Couple of things, and it's not just prop tech alone. I would say that has happened in different
Sure.
sort of businesses, right?
Yeah.
I think blaming just prop tech for that is not the right thing. I think we've seen that in edtech, we've seen that in fintech. I think uh, the reason why some of these things didn't pan out, and honestly, as a venture capital investor, I think we all take that risk. By the way, some things work, some things don't work. But I think fundamental principles where I think things didn't work out was uh, growth at any cost. Work till a time when you had money which was coming your way. Somewhere I think the startups which have struggled, couple of things went down for them. One was, I think, not too much focus on unit economics. The unit economics were not working out, and then there was a hope that at some point of time it would work out. So unfortunately, that didn't happen in fact all of these cases that you would
Yeah.
see. Some
Yeah.
of the cases are what you mentioned about the founder conflict, right? That the founder conflict starts to become sort of little bit challenging. I think one of the learnings we've also had in prop tech space, I mean, which I think a lot of investors do sort of realize, that having a very large co-founding team, 6 7 people, is also a very negative, right, in terms of a longer sort of
That's
journey
in
of a
any
startup.
startup or prop tech. So,
We've seen that in PropTech. I think that was a long ago, which
okay.
was one of the poster
Housing
child.
was, yeah.
Yes, maybe, we saw there, but yes, I think there are some of those learnings that, a very large founding team, because the stake continuously gets diluted, there could be varying opinions around, how do you want to build it. And then, of course, I think the core fundamental, see, premise of any business is to make money.
Yeah.
Whether you make today or whether you make tomorrow, that I would agree on that. Fine, because I'm a growth investor, early stage. I'm okay for founders to burn money at early stage, because you can't be, you need money to hire right people, you need money to sort of grow your business, but that can't be forever, right?
Yeah.
I
Yeah.
think somewhere, I think the fundamental goal of any business is to start making money at some point of time. Now, when the markets are great, when you are, when the opera is playing, everything is fine. But when the music stops, I think some of these starts to sort of hit you. And I think that fundamental principle we should never forget, I think, is what my firm
Yeah.
belief
So
is.
we'll talk about that a little later. But I was just wondering, like in this case, is there any pattern across the prop tech startups that have emerged? But you're saying that it's a very
No, I
general.
think it's a generic sort of view that we've seen in the entire space of venture investment. I don't think we can specifically point it to any prop tech
Or any
startup,
pattern
or
in the
any
thing.
specific
Okay.
pattern. I think
Sure.
that's a very, very generic
Okay.
sort of observation that you would have across the spectrum.
Sure. So one of the newer themes in the PropTech space have been the fractional ownership
Yeah,
platforms, and
yeah.
now regulated by SM REITs. So is that something that you
No, of
Earthfund is
course,
looking at?
it's a very interesting space, right? I think what we saw in REIT was, and I think that's true with every space in India, that we allow it to grow, and then when it sort of starts to become sort of a difficult thing to manage, is where the regulation comes in with a hammer, right?
Hmm.
I think this is a space where I think regulator had been very proactive,
Yeah.
and honestly the SME REIT is a very welcome step change in that, right? Because we were seeing proliferation of different sort of, fractional ownership
Yes.
startup,
Yes.
not regulated. The retail investors would have got trapped into that. So I think that's a very, very welcoming sort of step, I would say. I think what we've seen on the REIT side is The commercial REIT has of course picked up. You have one of the the top three largest REIT that you're already there, managing very large pool of money in India. I think this just paves way for a lot of interesting sort of startups on other spaces to come up, right? Whether it could be around warehousing, whether it could be around logistics infrastructure, right? So ports and a lot of construction sort of related space. Of course, I mean there is a retail sort of thing as well that will come up, and then there people are talking about resi. I'm not too sure. People have different point of view there.
Yeah.
That can you have a REIT on a resi assets? I think different point of views, but bunch of different spaces. I think we will start to see more and more sort of interesting sort of companies come up.
How do you think that will impact the industry?
I think it would be great for industry. Couple of things. I think it just sort of makes sure that the money flow to the industry starts coming in more and more. I think the biggest challenge with the real estate industry per se is any asset that you want to buy. It's like a big chunk of investment that you do, right? I mean, you buy an apartment in Bangalore. I think the way rates are,
Yeah.
nothing you are getting below, say, a crore, crore and a half, right?
Yes.
Similarly, if you want to buy a commercial asset, I mean, you have to shelve a big check, right? And which is almost like people's net worth, or maybe at least, 60, 70, 80% of their net worth. I think some of these would allow that small checks to come in into this industry. A. B, I think regulation plays a big role because, it provides a comfort to people that yes, I mean, there is a regulation, there is a watchdog which is looking at this space. So we are at safe hands, right? I don't think without regulation we would have such a thriving, a stock market that our country has, right? And similarly, I see that a lot of those things would start giving more and more comfort to retail investors to start considering this as a, an asset class
Yeah.
where they can invest in their small checks, sort of diversify their investments and sort of grow their wealth.
Yeah. So let's talk about the global prop tech ecosystem a little bit, right? So how
Hmm.
do you think that has evolved compared to India? So let's talk about the US markets, China, maybe the Middle East.
Sure. No, I think, see, to be honest, I think the scale that we see in US and China is very different from India. I think we are barely scratching the surface. I mean, no matter what we would say, I think we are still long, long way to go, right?
But are they completely different markets, or do you think there is a game to sort of play in terms of having similar business models here, or do you think it will take a completely
Yeah, yeah.
different sort of evolution?
No, so see, I feel that there are a lot of things which have already played out in both markets. For example, say the listing platforms, we've seen that in US, we've seen that in China, we've seen
Hmm.
that in India as well, right? So there are plays around consumer which would be similar, right? Similar to say the interior platforms we've seen in China, we've seen in US as well. The fractional ownership we've seen in US,
Yeah.
China, everywhere, right? So if you talk from a consumer standpoint, I think there is a playbook that would play across all these
Okay.
countries.
Okay.
I think the second thing that I'm noticing, particularly in China, that if I talk about PropTech and particularly the retail side of PropTech,
Okay.
where we have seen a different trajectory by the online players to move into offline world, right? So if
Hmm.
I talk about China retail, we are seeing a lot of online players setting up the moving the retail space in China, right? Similarly, for example, I mean Amazon's acquisition of Whole Food for that matter, right? I mean,
Hmm.
though it's been some time, but that was also a step in that direction. I think that playbook is still to play out in India. I think a lot of these offline, online folks would start moving offline at some point of time because people are realizing that 90 odd percent of the market, the retail market would be offline. We've started to see that in few brands, but I think more and more of that phenomena would also come into the PropTech side. So that would also open up a lot of plays around, the data analytics. How do you open up such large format store at such, short span of time? That rule book has to play out. The third sort of thing that I strongly feel about is, see, US has been different. Honestly, I mean, China is also a little bit of an opaque market
Yes.
because you
Yeah.
don't know what's really happening. And honestly, if you see the Chinese real estate industry, largely three players control that market. The Evergrande issue that we saw, plus
Yes.
Wanki Group, and one more. Again, these are semi quasi government entities as well. So very different take there. But one of the other pieces that I feel strongly about India is that the tech solutions that the folks in India are building, and given and honestly, I mean, Middle East, when I talk to a lot of people in Middle East or for that matter in the US, everybody is appreciative of the tech talent that we have as a country, right?
Hmm.
While there are playbook in US where people have, sort of built BIM softwares, people have, built design softwares in US, but again, these are expensive, right?
Hmm.
For it to come to Middle East or for
Yes.
that matter, come to, other parts of the world. But there are equally or rather better products that we've seen in India.
Hmm.
And these are honestly, if you see the cost arbitrage that we enjoy as a country, a lot of these solutions have the ability to go to other parts of the world, right? I mean, the first port of call for all of our founders would be, okay, fine, let's try out the Middle East market because, the average order value is a little bit larger there. The economics works out better. And then again, if you see Middle East, I mean, Saudi has been just, going crazy around construction. So a lot of founders are
Yeah.
finding interest, adoption in that market around Middle East. And then, a lot of founders are then eventually going into, the US market as well. So I think the playbook, would be similar. In fact, I think particularly for the tech solutions, we are better placed than some of the counterparts. I think it would be a question of, finding the founders who are building right sort of product and then their ability to capture those market, I think is what broadly what we will see in the coming sort of years to
But the
come.
way some of these markets work is also very different, right? I mean, if you look at the US market, they have an MLS. I mean,
uh,
you cannot do a transaction without a broker involved.
so true,
Very, very different. Here, your
so true.
security guards are doing transactions,
Yeah,
right?
yeah.
So, isn't there space for different business models that would work out in such markets?
No, see, the local aspect of any business would be super important, I think, and those tweaks and nuances you will have to figure out basis how your market is stacks up, right? Who are the people in different value chain whom you will need to take care of? Who are the sort of people whom you really can't disintermediate, right?
Yeah,
I think you have to take them along,
yeah.
that journey because see what we've seen, people would say, okay, I am, sand broker or I am, in different spaces, my idea is to sort of remove middlemen.
Hmm.
But then you eventually become a middleman,
Yeah,
right?
we've seen that.
So
Yeah.
you try and displace
Hmm.
everybody else, but then you eventually end up becoming a middleman. So I think the context would be different because the way these markets are organized, but the fundamental premise is going to be these same because at the end of the day you have to look at it from consumer aspect, his or her perspective that what kind of solutions are they asking for and how do you serve that need, right? The value chain could be different. I mean, and you can approach it
Okay.
differently in different
Hmm.
contexts.
Are you seeing global startups looking to enter the Indian market?
So you mean from the PropTech space
Yeah, from
or
the prop
prop?
tech space.
So honestly, what we've seen is honestly, I haven't seen much
Okay.
on that front because in fact, I've seen a lot of Indian folks sort of trying to move out,
Okay.
and I think that's a broadly, I think on the B2C side, maybe few folks, but B2B side, I think still long way to go. I think because of the way we are organized, it's a lot many developers, regional focused, and all of that equation also comes into the
Yeah,
picture.
so it's harder to sort
It's
of enter.
maybe how do you grow and you need foot on the ground to make it work. Plus honestly, I mean also how many large developers we have who would have the ability to pay the kind of pricing that the US startups would ask for,
Hmm.
right?
Hmm.
So I think that equation also comes into picture. So B2C side, yes, some efforts being made. For example, in rooftop solar and some of these spaces, we've seen that the folks from other parts of the world have sort
Okay.
of tried to move in,
Okay.
but
How has that worked?
so I think still early days. I think,
Okay.
I think the current government with the focus on, sustainable energy, and also by the way, one of the interesting space, particularly if you talk about sustainability,
Hmm.
grade A office spaces,
Hmm.
the people who are renting out the space are saying that my source of energy should be green because I have to meet my SDG goals, right?
Oh.
So
Yeah.
there is, that consumer sort of pull that is coming into, some of these sort of markets. So
Hmm.
so some of that, I mean, still early days. I think we haven't scratched the surface. I think long way for us to go. I mean, while I think what we've seen in the public market, the stocks of, the solar companies have gone up, but I think on ground we will need that time for the EV charging infrastructure, the solar
Yeah.
infrastructure, and some
Yeah.
of these things
Yeah.
to sort of come.
What's the government level support you are seeing for the PropTech sector? Is there an industry body that sort of lobbies with the government? I mean,
No, there
is
is, see, to be honest, I don't think there is a very prop tech focused body. What we have on the real estate side are, Credai and Naredco, of course. That is, of course, helping the
yeah.
industry. But honestly, I think too early for, the prop tech founders to, figure out a body that would help them. And maybe you guys, you folks should take a lead on that.
So let's talk a little bit about the whole VC ecosystem, right? So let's talk about the fundamentals. So
Mhm.
you said that as businesses we raise money from you. Where do you get your money from, and what are your obligations to the folks that you get your money from?
Yeah, no, I think that's a great question and good to sort of, a lot of time founders feel that, it's our money. But see, at the end of the day, we also get money from investors. So our pool of money could be coming from, enterprises. Just in our case, for example, Brigade is one of the sort of, anchor investors for us. Similarly, the money could be from other corporations. It could be from, the family offices. It could be from financial institutions for that matter. So the money comes in from different sort of pools of people and institutions, and we club it just like how a retail investor invests in a mutual fund, and then we find startups that we would want to partner with, put that money to work. And eventually we have to return that money to the investors, right? So while I think there's a lot of talk about venture investments and why are investors not writing the check, why is there a sort of slowdown in the ecosystem, I think a lot of it also has to do with when the money goes back to the investors also have to find that confidence to replow that money back into the venture ecosystem. So our source of money are these institutions, family offices, HNIs, and other financial
So what are
institutions.
the obligations? I mean, what's the time period you have? What are the
Yeah,
other obligations you
yeah,
have to them from a reporting mechanism as
sure.
well, from a
No,
governance
so see,
mechanism?
governance mechanism works beautifully. Typically, you would see the fund structure. It's a SEBI-regulated fund. We also are an AIF, right? Most of the venture
Okay.
firms in India, you would see those would be structured as AIFs.
Okay.
So, there is a the regulatory body that, also governs us. Time frame again for funds differ. Again, depending on the stage you focus on, the kind of investments that you would want to, do. So you would typically see a, 7 to 10 year horizon, at least for early stage funds. I mean, there are very late stage fund which also now say 4 year, 5 year kind of horizon. So again, I mean, those are different for different people. I think the return wise, it works very beautifully. Typically, what you would see is that there is an expectation that the industry, the investors would have, in terms of the venture asset class, what you would see like 25, 30 odd percent returns the good funds do,
ARR.
right? The IRR,
Yeah.
essentially, yes. So that's what the market expects because they are taking that early on risk. We are also investing. We are investing in portfolio of assets. We do realize that we are if the founders are putting their life behind an idea, we are an investor. We are making a portfolio of investment, and unfortunately things would go down south, right? So if we do a 10 investments from the fund, maybe 2 3 would go down. We
Yeah.
do realize because we are trying to sort of find partners or entrepreneurs who are taking that risk, who are trying to redefine that market, so there is risk
Yeah.
involved.
Of
But
course.
what you do believe is that you would have few large outcomes, right? I mean, at least the 3 4 outcomes would make up for all the losses that you make in some of the things that didn't go the way you planned, right? So broadly, that's how the math for the venture industry works.
How do you time the exit of the startups that you invest in with
Yeah,
the payback that you have
yeah,
to give?
yeah. No, that's a very tricky part. I'll be honest. See, typically what happens, what is the source of exit for early stage investors, right? I think for a 8-10 year life that we are there when we are partnering with the founders. To be honest, an IPO is very far-fetched
Yeah.
dream, right? I
Yeah.
think from an Indian context, growing a company, I have to be super lucky if a company goes into IPO in 8 to 10 years. However, having said that, I think now regulation has opened up. We've seen these MSME IPOs and some of these sort of bourses which have opened up, and we did see some companies going for listing early on. So there is a added room of exit that has come up to the investors, right? The second set of exit that come for us at early stage is also through a lot of M&A that
Yeah.
happens in early stage, right? So there would be, say, a strategic acquirer, a global acquirer, or an Indian company which is looking to acquire an asset, a company. And if there is sort of alignment with the founders, that they would be able to grow better, going into a larger umbrella, is when you find an exit. The third piece that comes to us is in the form of secondary exit. See, because our business is also like passing the weight into the next guy,
Yeah.
right?
Mm.
Because the course of business also changes, right? I mean, early stage, there are a lot of things that we pay importance to. The late stage investors, look at other things, and then the buyout investors look at other things. So it's also business of passing the baton to the next set of folks, right? And that's where also our exit comes from in a lot of cases, where these late stage investors come and buy our portfolio, right? I think broadly with this, you try and sort of return back your money to your investors with the profits that you make. Unfortunate situation if things don't sort of
Hmm.
you find an exit. Essentially what happens in a handful of cases, there is a in principle distribution that happens, wherein the investors get the shares of some of the companies that are still
Oh,
held in the trust,
I
right,
see.
from which the fund invests. So
Okay.
so there is in specie sort of distribution that in handful of cases that also happens.
Okay. So we spoke a little bit about this earlier that there have been issues in the startup ecosystem. We have had loss-making unicorns. Maybe they will turn profit someday. Maybe they will not, right? Corporate governance issues. So what has been the learning from this, and how do you see the industry evolving from here to ensure that we see better outcomes?
Yeah. No, see, unicorn and loss making, in my view, I mean, it's I don't think I could correlate that, right? There could
Okay.
still be unicorns which is loss making. I think um, because if you look at the size of our country and the opportunity it poses, there could be a possibility that some companies would still lose money because they are in that growth path. Having said that, what is more important to me is your unit economics and your path to
Yes.
profitability has to be there. It can't be like I'll keep burning. Oh, I have become a unicorn, still I haven't been able to figure out
Yeah.
how would I eventually make money. I think that's one premise that I would want to lay there. I think the other piece from an governance is a big question that you ask, and I think that is super important for and we as an ecosystem partner, I think is the combined responsibility of entrepreneurs as well as investors to ensure that happens.
Hmm.
Unfortunately, we have had that situations, and a lot of dirt did come out eventually in few situations. I think learnings around it is that a lot of people, by the way, are trying to create those guardrails and system. People are trying to figure out more promising way of, the internal audits and internal checks that you do. Some people are thinking about sort of forensic audits that you do in few cases. I think some of those learning is coming into to the
Okay.
industry.
Okay.
I think unfortunately, I think so much of money came in short span
Yeah.
of time with so much of global liquidity. I think we did see unfortunately a lot of these challenges in the industry, and I think the founders or the investors or the ecosystem in general, in the pressure of the growth at any cost, I think we did encounter some of these situations, but the industry is taking cognizance of that. I think we are seeing people are becoming very touchy, the investors are becoming very touchy, the founders also sort of realize the importance of how it completely leads to erosion of the value that they have
Yes.
created over time. So
Yeah.
they are also equally becoming more and more aware of some of the challenges, that some of these issues do sort of poses. Because see, one of the challenges that you see in early stage startups is you start something that you want to grow. Sometimes you don't have figured out enough system and processes in place, right? So,
Okay.
so how do you ensure those system and processes are in place early on? I think some of those things is what I think founders are also now pushing in their team, and those are the things which is going to sort of, in my view, sort of create a sort of maturity in the ecosystem.
So as a VC, is that something that you are going to be looking at as well? That does this company have systems and processes, or ensure that that is built
Yeah,
out, if
yeah.
not?
No, of course. I think more and more importance is being laid out on that, and we continue to look at that. Plus, as I said, I mean, some of the newer sort of things that people are trying to sort of, make sure. For example, see, governance-wide, investors were taking board seat, but the challenge there is that fine, you are on board. There is, as I said, a lot of trust factor. You can't go and look at every document day in, day out, right? So a lot of
Yeah.
time you actually depend on the senior leadership in that startup, in terms of what comes your way. There are auditors, by the way, who are doing it. It's not that, the auditor was not there. I mean,
Yeah.
we've seen situations, unfortunately, where there were big sort of, auditors in some of these companies. So I think, the new thing that people are saying, okay, one is processes and system brings in more checks and balances, create certain more sort of adverse outcome for unfortunately founders if in case it comes to notice that there has been a cause incident in companies, right? So
Okay.
that there is a sort of disincentivization
Oh,
for
okay.
people
Okay.
to sort of people should think twice before say anything goes wrong. Or if they come if it comes to their notice about any wrongdoing, I mean they should take immediate step around that, right? So and then the forensic audit and some of these pieces, right? And then investors are becoming very very clear that the governance system and process and protocols are all there.
Mm. So you, as a business owner, when I'm trying to create a company, right, I'm thinking of the long term. I mean,
Hmm.
I'm thinking of something that outlives me, right? I mean, it's the legacy you leave behind. As an investor, you're coming in for a short period of time. Do you see some sort of conflict of interest there, or how does it get balanced out?
Yeah. So see, to be honest, I'm not coming for a short period of time. I think we are not like, say, a public market investor where we would have a liquidity. I can come in, enter the company today, and tomorrow I can get out because it's listed on exchange. So while I do agree that the founders are building it for 20 years, 30 years, 40 years, unfortunately, because the way we are structured, we don't have that luxury to be with the founders for that long. Most of the funds, I would say, I mean, there are few handful of funds which are built that way that can continue to it till eternity, but we still come for a long term, right? I mean, in my view, 6 7 year time horizon or 8 year time horizon, it's not short term, right? But having said that, I do believe that a lot of time disconnect happens because of that. And it's also question of, see, I don't think every business is made for venture investment. Let me be
Yes.
honest, right? I
Yeah.
think where we go wrong is if there is a disconnect between the business. See, venture business looks at high growth businesses, things
Yeah.
which can, grow fast.
Yeah.
I think that's where we sort of, hit the wrong sort of, pedal, because somewhere those expectations are misaligned, or maybe the business is not such that
Hmm.
you would have a hockey stick growth,
Hmm.
but the venture side of the world looks at those businesses which can grow at a hockey stick pace, right? So yes, I mean, I do see there could be misalignment in that if you sort of get to a business with X expectation and it doesn't turn out that way, and it works both ways for the founders and
Yeah.
as well as the
Yeah.
investors. I'm
Yeah.
sure it's too stressful for founders in that scenario as well, right? But the point on whether that time frame sort of see, I think, as I said, you always have an opportunity to pass on the baton to the next sort of folks. I mean, if and I have seen those situations in places where I have invested. The company, let's say I came in when company was there for 4 5 years. I'd been in that business for 8 years, 9 years, and then the next set of investors came. They wanted to buy us out. We moved out because of
Okay.
the reasons that I said,
Yeah.
the challenge that we have around the life of the fund.
Yeah.
And then the next set of investors took it, and then eventually some of these companies went for an IPO. I mean, we would have loved to be in that space where, my company would have gone for an IPO, but somehow, I mean, unfortunately, we were not structured that way.
Hmm, hmm, hmm. So, was there a SEBI or is there a SEBI regulation that prevents loss-making companies from listing in India, or was there a temporary change to this?
Yeah, yeah. No, so my recollection, honestly, I'm not an expert on this, but see, earlier you had a situation, I think 3, 4 years back, where you need to had profitability for 3 years,
Okay,
right? I think EBITDA level profitability for 3 years for you to go for a listing.
okay.
That did change. I think in last, 2, 3 years back, SEBI did sort of open up the market where, there was some relaxation on that point, because the challenge there was that all of the startups that you say a 3 year profitability, continuous profitability was not very easy for them.
Hmm,
So that window did change. I think 3 years back or sometime or 4 years
okay,
back. I mean, don't
okay.
recollect the time, but it did sort of change. So there was because I think it was more with the global standards, the way, the I think the regulator also saw that the market has also matured, and also in line with the global practice that you see that companies are also remaining private for long. So I think one of the
Yeah.
fundamental change that has happened in the investing world because of the money coming into the venture side, that the companies are staying private for long. I mean,
Hmm,
if you see, unfortunately, fortunately, the listing that happened for Microsoft in that era, or Google, or some of these companies in that era,
hmm,
the time when they listed for
hmm.
them to go public was
Okay.
actually, if you see, shorter. And plus, the market value for these companies when they listed were much lower than what they're today. So you have the room
Hmm.
for growth.
Okay.
Unfortunately, I think, or fortunately, whatever you say, so much of money has come in into the venture world, and then the venture sort of, the world investing into these assets.
Hmm.
What has happened is companies are deciding to stay private for long, right?
Yeah. Yeah.
Because that allows them to
Yeah.
experiment, that
Of
allows them
course.
to, maybe move into newer verticals, try out new things.
And
And
there's the overhead of being public as well.
yes, I think, that whole regulatory
Yeah.
aspect in terms of, you are in the, eye of the
Yeah.
public every time.
Your
Uh,
quarterly
yes,
reporting
yes,
and
yes. So I think that also has fundamentally changed the equation, if you see from a, from a regulatory standpoint.
so before we conclude, why don't you paint me a picture of what real estate in India will look like?
Yeah,
Maybe 5, 10 years from now, we're to be a $1 trillion dollar industry by 2030.
yeah,
So how will it be? How will the consumer experience be, and how will we transact in this
sure.
space?
No, see, honestly, I'm more of a prop tech person than a real estate person, but let me
But
just, yeah, yeah.
technology is going to impact.
Yes, yes. So see, broadly, if I see, I think as I said, we are we have barely scratched the surface. Both, I strongly believe in terms of real estate as well as the tech in real estate. Um, any aspect of the real estate journey, you start from your land records. Now that
Yes.
is getting digitized, right? We are
Hmm.
seeing interesting startup coming up, digitizing those records, which is getting used in underwriting decision, right? When we sort of search for our houses, right, the kind of technology that would come, that we don't need to, we can sort of filter out at least 50% of the property sitting at home, because we would have so much of information sitting at our homes with the VR and AR sort of becoming mainstream, that you don't need to make a physical visit in different locations, right? The third piece, I believe, is, the parallels I draw, is we order a pizza, we have a visibility for a 200, 300 rupee product in terms of when is it getting delivered. We buy a house which is a crore, 1.5 crore, we don't know what's happening with that, right?
Yeah.
So more and more visibility is going
Hmm.
to come to
Interesting.
consumer on that, right? The other piece is the entire transaction flow is all physical today. No matter, we have digitized as a country, there's a big sort of, public infrastructure that the government has put, the digital infrastructure, but still most, I would say 90, 95, 99% of the property transactions are happening offline. So a lot of that would get digitized, right? The entire sort of, what I talk about, the customer delight part of the real estate, which helps us in leading a better life, or, ease of where we live, where we work, I think that would go through a sea of transformation, right? So whether I think, we've seen that in interiors, in a lot of other parts of our walks of our life, we will see more and more technology sort of permeation that would happen, right? If I think from an office state standpoint and the way the world is changing, where we are living in hybrid scenario, people going to their office for 2 days or 3 days a week, I think more and more efficient utilization of the space. And it's not like, just the four walls it used to be. I mean, people are looking for experience. You need a cafeteria, you need a
Yeah,
sort of, parking space. So, lot of the technology part and, the new business aspect would come in those aspects as well, right? And then I think, the technology getting used within the construction process in terms of the sort of, how you source your material, how you sort of, source your labor, how do you manage those sites and projects, right? The how you design those sites, right? Whether you use AI to sort of design a better or less carbon emitting sort of, sort of a project.
mm,
I think lot many ways we will see technology come in into different walks of the our lives. So I think broadly we've just beginning to see that curve. I think we will see an interesting time in next 5 to 10 years. We'll begin to see that shift happening as as we move as a country and an economy. We will begin to see that change sort of happen in front of our eyes.
nice, interesting. Saras, why don't you tell us a little bit about your journey and how
Sure.
you came in into Earth Fund?
Yeah, no, I think to be honest, very I would say my journey had been into investing throughout. Did start with entrepreneurship initially, but then I realized, okay, I'm a
What was
better.
that? Tell us
So
about that.
no, that was a very old style. I wanted, I started an export business,
Okay.
so largely around that. But then I said, okay, fine. I mean, maybe I'm not enjoying this much. Got a break into a private equity initially, and that allowed me to sort of get a sense around the venture world. And then in the last 10, 12 years been on the early stage investment, been with investments, have done investments across consumer, across financial services, digital services, construction tech, right? So bunch of these different spaces is where I invested in. And then eventually sort of at least the sense I got was this was a very interesting space in terms of how the landscape is changing. And broadly, as I said, my sort of philosophy is also that if I take the example of football, where the ball is going to be
Yeah,
coming next. So I definitely believe that this is a space which is sort of which is coming up with a lot of things coming together, whether in terms of era, whether in terms of
yeah,
digitization, whether in
yeah,
terms of, as I said, the consumer expectation, whether in terms of the second generation coming in a lot of real estate
yeah,
companies in India and as well as in globally. I think we will see those transformation happening,
yeah.
and that's what has brought me into this
Yeah,
space.
definitely. I totally agree. I think the real estate industry and prop tech, especially, is going to be a very exciting space now. And wish you all the best with Earth Fund.
Thank you so much.
And thank you so much. I mean,
So
I've
yes,
learned a
any
lot.
founders who are building in prop tech, we are there. Do reach out to us. We would love to, have a word with you.
Yeah, thank you. And I should say it's been strangely interesting having to interview a VC. So thank you for that opportunity.
No, my pleasure. Thank you. You've been a great host and a great interviewer. So thank you so
Thank
much.
you.
My pleasure.
Hope you have been enjoying our podcast. At Property Angel, our mission is to make real estate affairs safe, simple, and efficient. And that is why we bring you these podcasts to empower the consumer so you have the right information. We are an asset management company. You can outsource your landlord responsibilities to us, including tenant management aspects, maintenance, rent collection, financial management, and all of that. If you have any such requirements, please do reach out to our team. Please do also like, share, and subscribe. If there's anything specific you would like to listen to, please do leave it in the comment box below. Thank you for tuning in.